Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. I'm Rapstein, and here we are on Monday, the 29th of August, 2011. It's getting on to 3 o'clock in the afternoon. You're down about $9 late in the day in the gold market. You were down a lot more than that at one point. You were down $19 at one point. Silver backing off, and I think support's going to be close to that $40 area. And in the copper market, pretty much an unchanged day. 15 points either way. Nothing you can do there. Stock markets had a good bid all day, and in fact, if you look, it's going out near the highs of the day in all these indices. That's pretty impressive action. And even the bonds and the notes are, while they're down, they're not coming apart in any manner. The hardest part I'm having with the bonds and the notes, and that doesn't mean they can't enter a bear trend, is how long can it go if the Fed's going to keep interest rates near zero for the short term? Certainly as you get to the 10-year and the 30-year, you can get different games going. But as you get nearer in, that's where all that money's going to be impacting the market. So let's take a look at the gold market. And this is the December gold contract. And I'll just step back here so you get a feel for what's going on. The question is, the break that we had a couple of days ago towards this 1705 level, is that enough of a break in the market to say that we've established or trying to establish a trading range from roughly 1917 to 1705? That's going to be the big question. I'm of the opinion it probably is. What can I tell you? I'm joining that bull camp, but I don't have the technical indicator behind it yet. I've just got the beginning warning signs. I blew the chart up, and I'm going to put on this chart now the swing line. The swing line to me is massively important. It's showing you got a pattern here, and I didn't circle them by design. I don't want to confuse you, of higher highs, and you've also got lower lows. So we have widened out the trading range, which fits in to the 1917, going down to the 1705 level. Where is the market going to fight a battle to determine what next? And I think that battle is this red line, which is the 18-day moving average of closing prices. Take a look. You haven't been under that on a closing basis since the beginning of July. Now, if you got under it now at the end of the month, you might scare some traders. However, I start looking at the seasonals, and the seasonals start kicking into the bull side of the market on a historical basis at the end of August and go right on through the end of October. It's a mixture of how the wedding seasons go, gift seasons, buying. There's just a lot of things. Does it work every year? No. It doesn't work every year. Has it had a good history? Yes. Has it performed better in bull years, the seasonal, than bear years? Yes. Is this a bull year? How could it not be when you went to an all-time high? So I think that you have to pay attention to that and at least have it in your armor so that you're ready to sit there and when you do battle in the market, know what you're dealing with. So I'm looking at this pullback as an ideal way to come down. I'd love to see today's lows taken out, the lows. I'd like to see the market bounce around here and then resume its uptrend. I'm beginning to suspect that today's high, 1841.5, is one of those highs that if the market does what I said, come down first, when you get through it, you resume a real uptrend. Obviously, the key is not to take out 1705.40, and we'll have to see how that does. Is there a buy signal at work right now? There is not. This market is in a neutral mode right now. You still have the higher highs, the lower lows, and you're over the key moving averages. In terms of the Bollinger Band, which is a resistance point based on an algorithm, and if you want to know more about that, just go to Investorpedia and type in Bollinger, B-O-L-L-I-N-G-E-R, just where you see that band. It gives a great explanation. But think of it as an algorithm, a mathematical formula designed to take into account the market ranges and what projected resistance and support levels are, and understand that 2 deviations from the mean it comes up with will give a 95% reliability that the market will trade within these black bands. And these bands do move, obviously, on a closing basis or tick by tick, but not dramatically. They do widen out. They do narrow in. Well, I'm actually drawing that wrong. They widen out and then they narrow in, and they widened out again. I'd love to see them narrow in a little bit and get the market more stable at this point in time. In terms of market momentum, you've lost the overbought condition in the market. So gold has acted overall pretty impressive. One of the stellar performance certainly of 2011. I don't think you can take that away from the market. There's an even school now that's starting to show up of people giving you all the reasons they should be bearish and other people talking the $2,200 level. We'll wait and see. The chart right here, on a daily basis at least, is in a very neutral position. The silver market, unlike the gold, is in a bullish position. The silver market, if you look at it, you got the 40, let's call it 4014 support. The pattern, you certainly have a high that is higher than a previous high, and 3881 is higher than this high. Now the market has worked off its overbought condition. So like the gold market, you've got to be on the alert here for seeing where the potential support comes into the market. My guess is it's 4014. We haven't gotten there. It's about 70 cents away. We'll see what the market does. The game plan is temporarily thrown to the sideline if you take out 3881. In fact, you turn bearish. You then have a pattern of lower highs, and whatever the low is under there would be lower than that low, and I'd make an argument for 37.25. It all means that I think you're getting to important numbers right here, right now, and that's how I'm looking at the market. In the copper market, I've been looking for pretty much a sideways action to happen as you bring in the Bollinger Bands. It's exactly what's going on. So you're overbought. Let the market coil itself up here, and we'll see what the next step is going to be. But your next step might be our futures trading kit before I go on. You know, recorded webinars, I think they're so important. I get to go through about nearly 35 to 40 charts, and I've been doing it almost every day now. And I start you off in the stock indices, go to the currencies, the interest rate models, carry you right through the meat markets, the grain markets, all the soft commodities, and of course the energies. And I'm going to talk energies on charts in a minute here. I back it up with my written commentary, and it's not pages, it's short. My oral commentary lasts about 2-3 minutes, and I give specific trade recommendations. It's all part of our futures trading kit. And this kit's a download. You know, it's got all the brochures on trading, the manuals, explains for you beginners, maybe some option strategies, the basics, and for you more advanced people, well, you get to work with our charting software if you haven't tried it before. How do you get it? It's free. 1-866-973-2077. Give us a call, or you can go online, www.iraepstein.com. All right, so let's go and take a look first at the crude. The crude oil today set itself up by making higher highs, higher lows. One of the correlations that a lot of us watch is this in the stock market. You should actually throw on, maybe I'll do that tomorrow for you, a chart of one of the stock indices with this. You'll be amazed how they correlate together. So I'm looking for this market potentially to get to 89.64 and temporarily support near 8,500. In the Brent, the pattern is one that is not like the WTI crude. You have higher high, but you have a lower low. Do you see that? And here you have higher lows and higher highs. That's the WTI. So still the stronger chart, at least, seems to be the WTI. And this market, I'm looking for big-time resistance in the next $1 or so in the Brent crude, literally right up here. And those people that thought Libyan oil was going to immediately break prices, they haven't been right yet, right? Gasoline market starting to settle back, getting overbought. Will it embed or lock in the trend and then take off again? Hard to tell. I see good support, though, at the 269 level. I don't want to see prices under 262, the last break low. Barring that, after a correction, I still see an uptrend. In the note market, the notes have been trying to break today, and the market's in a corrective mode. 128.11 was and a half was the last break low. You didn't take that out today. It is very important if it's going to go up, do it now. It hold this 18-day average and then resume the uptrend as far as I can see. In the gold-silver ratio, and this is really where you need how many ounces of silver to buy gold. Look at how flat this has been going. And I've been talking that it's stuck in that 40 to 45 level range. It still is as far as I can see it. So that pretty well covers where we're at on all these markets. I will see you tomorrow at about the same time. I'm Ira Epstein. Hope you sign up for our Futures Trading Kit.